This is the story of Charlie Javice, the so-called FinTech Wunderkind, who made millions by pulling off one of the biggest con jobs on Wall Street. She just got slammed with a prison sentence because she tried to sell a ghost company to the largest bank in America. Listen up. This is a cautionary tale about faking it until you get caught. Charlie Javice just got handed a sentence of just over 7 years in federal prison. The judge ordered her to serve 85 months, followed by 3 years of supervised release. That's a total 10-year sentence hovering over her head. She earned this time for defrauding J.P. Chase in a massive corporate sale. The massive bank bought her student financial aid startup, Frank, back in 2021. The price tag on that deal? A staggering $175 million. The shocking part is why JPM bought it. They weren't buying software, they were buying students. Frank was pitched as a platform to make applying for college financial aid easier. Think of it like a TurboTax for the complex, free application for federal student aid form. It was supposed to help young Americans maximize their aid quickly. Javice sold the dream that Frank was a gold mine, a direct line to millions of young customers. JPM saw this as a chance to cross-sell checking accounts and credit cards to customers at the beginning of their financial lives. That kind of access is worth serious money. But here is where the fraud comes in. Javice claimed Frank had over 4 million student customers. The truth? Frank had fewer than 300,000 real users. She inflated the customer base by more than tenfold, 4 million fake accounts versus 300,000 actual users. That's a huge difference. She and her chief growth officer, Olivier Amar, cooked the books. Javice even directed an engineer to fabricate millions of users right before the sale. When he refused, she went elsewhere, buying real names and emails from data brokers and using a data scientist to create fake or synthetic data to fool the bank's team when they inevitably checked. She was playing a high-stakes game. Before the deal went through, one employee testified that when he questioned her methods, he told her, "Don't worry, I don't want to end up in an orange jumpsuit." Well, she just got fitted for one. Javice was once celebrated. She was a Wharton grad who landed on the prestigious Forbes 30 Under 30 list. She even scored a private meeting with J.P. Chase's CEO, Jamie Dimon, during the acquisition talks. She was the definition of a rising fintech star. But that star exploded. JPM quickly realized they bought a hollow shell. They didn't get a functioning business. As the prosecutor bluntly put it, they acquired a crime scene. JPM fired her about a year after the acquisition and then filed a massive lawsuit. She was arrested in 2023. In March, a jury found her guilty on 4 major counts: bank fraud, securities fraud, wire fraud, and conspiracy. The government asked the judge to give her 12 years in prison. They wanted to send a message to other startup founders. Faking your numbers is just as bad as any other kind of massive fraud. Javice's defense team begged the judge for mercy, arguing for just 18 months in prison. They painted her crime as a single, stupid mistake she made when she was 28 years old. They even pointed out that she had done charity work, like organizing soup kitchens when she was just 7 years old. They tried to argue that JPM should shoulder some of the blame for rushing the deal, suggesting the bank was too eager, too worried about losing Frank to a rival bank, and failed to do their homework. The judge, Alvin Hellerstein, heard it all. He acknowledged that Javice seemed like a good person who had done bad things. He even tossed some shade at JPM, saying the bank had a lot to blame themselves for being careless. But he quickly shut down the defense's main argument. He said his job was to punish her conduct, not J.P. Morgan's stupidity. He reminded the court that markets require honesty. calling her crime a violation of just weights and measures, which he said was biblical. In the end, he split the difference, sentencing her to just over 7 years. Before the sentence was delivered, Javice cried in court. She told the judge she felt haunted that her failure had turned something meaningful into something infamous. She said she made a choice she would regret for her entire life and asked for forgiveness from the shareholders, employees, and her family. But the consequences of this massive scam are enormous, far beyond the prison time. Javice and her co-defendant, Olivier Amar, are on the hook for a colossal amount of money. The court ordered them to pay about $290 million in restitution. This covers the $175 million acquisition price, plus roughly $115 million in extra fees the bank was forced to pay. She was also ordered to forfeit over $22 million she personally gained from the sale, including salary and bonuses. The scale of this deception was so huge that Javice's case immediately drew comparisons to Elizabeth Holmes, the notorious founder of the fake blood testing company Theranos. Prosecutors even brought up a text Javice sent in 2022, where she called it ridiculous that Holmes got over 11 years in prison. The government argued this text proved their longer sentence request was needed for deterrence. Her lawyer tried hard to separate her from Holmes, claiming that Frank's product actually worked in helping students, unlike the dangerous, bogus technology Holmes was selling. But the judge was clear. The fraud was real, and the money was stolen. This whole mess is a huge embarrassment for JPM. It proves a fundamental financial truth. No matter how big or sophisticated you are, if you cut corners on checking the facts, you might just end up buying a worthless company. The pressure to buy the next big thing can make even the smartest bankers look like fools. For everyone watching, this case is a massive flashing warning sign in the world of fast-moving tech startups. If someone is promising you millions of users for a $175 million price tag, you better verify the data. Relying on a slick story and glossy press coverage isn't enough. You need proof. Javice is currently free on $2 million bail while she appeals the verdict. But even if the appeal fails, she is pledged to serve her sentence with dignity. In the end, this FinTech star fell back to earth hard. She traded her Forbes list notoriety for prison time and about $290 million in debt. That's the real cost of putting ambition over integrity. If you want more straightforward financial content that cuts through the noise, make sure you hit the like button, subscribe to the channel, and ring that bell so you never miss another video.